This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the datasets and doing a fairly quick technical analysis over the SPY for January 7th, 2026. I'm still not feeling all the greatest, so if it sounds like I'm frustrated or something in this video, it's not because of that. I'm just very exhausted. But with that said, let's go ahead and jump into the data. On Tuesday, the 6th, we had the S&P Global Services and Composite PMI come in for December. And even though the forecast was expecting cool numbers, they came in even cooler than that. So it's showing, again, significant slowing. We saw the ISM manufacturing numbers yesterday showing pretty significant slowing. We're seeing the Atlanta Fed GDP now showing significant slowing. So going into tomorrow, Wednesday, January 7th, we have the ADP non-farm employment change. This is a very important data set. They're expecting this to come in quite higher, but even then, that's still under the mark. If it comes in at that 50,000 mark, that would still be under the mark by quite a bit. With that said, I don't expect the numbers to be that 50,000. I don't really expect it to be negative either. I expect it to be between the two. Um, Other than that, we'll see. If the numbers are very cool, meaning another negative, basically around this negative 32,000 or more, then that's going to be a very important factor. Other than that, I think the rest of the data for the 10 a.m. time slot is going to really overshadow anything that the ADP gives us at the 8:15 time slot. It might affect the very early, uh, you know, pre-market and intraday, but after that 10 a.m. data comes out, I think things will shift. Now, the 10 a.m. data is very important. It's the non-manufacturing side of the ISM data. Again, we did see the manufacturing side of the ISM data on Monday. It did come in cooler. So the expectation should truly be that we will be seeing cooler non-manufacturing data as well. And that's the employment, the PMI, and the prices. We also have the JOLTS job openings for 10 a.m. Now, we did have a message from the Fed, and maybe I might have to just pull that chart up because it was one of the Fed charts. Let me get the quote. Hiring rates have fallen to their lowest level in a decade, according to the Federal Reserve Fed data. So that means it must have just published. So I'm going to pull that up. Now, I did quickly look over that data that the Fed talked about. They released that tomorrow, so very likely that was just kind of a preliminary thing, a preliminary release to the public. However, all the individual state data comes in tomorrow. So we will go over all of that in tomorrow's video. There's actually some really good charts that we're going to go over that show all of the top states with the highest unemployments and everything else compared to the national average. And yeah, so that's really what we're expecting out of the data tomorrow is that 8:15, that early pre-market to enter that early open is going to be affected by that ADP non-farm, depending if it's a very cool reading or a hot reading, I guess. Um, Other than that, kind of just wait that 30 minutes and then we have all that very crucial ISM data and the JOLTS data and with the job openings as well. So I heavily anticipate the job openings to be very low. With that clue from the Fed that the data tomorrow is going to be pretty bad, that's very likely meaning that the individual state unemployment rates will be rising. but we will cover that in tomorrow's video. Again, there's some really good charts to go over for that. So yeah, other than that, let's go ahead and talk about the technical analysis. And getting into the technical analysis, as always, let's ensure the daily time frame is turned on and the moving averages and Bollinger Bands are turned on so that we can quickly go over it. Now, today we had a very bullish session. It was the buying action I was really anticipating out of yesterday's session. Unfortunately, I did not get a scalp today. Today would have been a killer day to scalp. It closed the cup. We got the move basically to that all-time high that we are looking for, and now we're really expecting the push. So with that said, let's very quickly go over the moving averages. Now, with the close at the 691.81, the 5 so the excuse me, the 5-day moving average, I always call it the MAS, but the 5 is pulling upward, and it will pull up above the 10 tomorrow. It won't be above it very much, only
If you're
about a
enjoying this,
dollar.
please check out my
I'm
Patreon. For just
anticipating
$1 a
the
month, you
5
can
to
join our
open
community
around the
chat and access our tools like the Unusual Whale
688.12 to
Spot and our own
688.20
personal GEX
range,
and
give or
DEX
take.
market
It could be a
positioning.
little higher, it could be a
My
little lower. It
$12.99
really
premium
depends on
tier
that
gives
ADP
access to
data
my personal trades,
and where
2
the
live
market
classes a
opens.
week, which are on Wednesdays
Now,
and
with that
Sundays,
said, we had
and
very
direct
important
support from
data
myself.
tomorrow. We
The links
did
to join
close
are
the
below,
cup,
but you can also
and I'm
join
going to
through
very quickly just turn off the Bollinger
patreon.com/wooksy.
Band. We
Thank you
did
for
close this
supporting me to help
micro
you
cup,
build skills for a
so
lifetime.
even though this is a handle on a larger cup, um, the handle itself becomes a nested cup. So that handle has been closed, and that's good news. That's very likely telling us that we will be pushing upward towards that upper Bollinger. Now, currently the upper Bollinger is at 694.94. Very likely it will be pulling up all the way to the 696 range, if not slightly higher. That means if we're going to have that upper Bollinger move tomorrow, then we will be seeing a close at or above that 696 range to really secure that day one of the upper Bollinger. Now, even though we have the cup closed here, that doesn't mean we expect an instant drop off for a miniature handle. We really do expect a little bit more bullish action in here to further solidify the cup and so that we can start building some bearish structure at the top. And that actually goes hand in hand with an upper Bollinger move, because with the upper Bollinger move, the day one, we anticipate the close at or above the upper Bollinger. So basically, let's say that that's 697 range, just to be very safe. 697, and then the day after that, we anticipate a higher high, because generally that's what upper Bollinger moves do. It's just a historically back tested thing. And so we should expect very likely that 700 to 701 range. And that's what we were talking about since Sunday. That basically you could buy into the upside. It was super good. And I hope a lot of you have made a lot of money from this upside. It's really nice when we are able to identify moves like this, because there's it's basically free buying in the current moment. So assuming we get the upper Bollinger, that means essentially we have 2 more sessions of major buying. Now, if we secure the upper Bollinger on the day one, I will go over that in tomorrow's video. So with that said, we just accept that if we're going to have the upper Bollinger actually hit, then it's going to take that level or above. Now, with that said, we do have the 5 pulling up. It's going to be above the 10 and with that said, that means that the upper bounds of the 5 is basically going to be around the 690 range. So it's really not that far from where the market is trading. The overnight price is currently right at 692, so only $2 above. Probably a little less than that with the cents included. Um, so if the market wants to truly close this cup, and start to head down to form some sort of micro handle to then head up again for a even further upper Bollinger move. Be prepared for that. And if that occurs, I'm personally going to be heavily, heavily, heavily buying into that 5 mile test. Because that's from the 5 mile to the upper Bollinger is, a whole $12 move. And it's going to be pretty much just straight buying. So if we pull down to the 5 mile, I'm going to see that as probably extremely bullish because overall the trend is bullish. And I'm going to turn off the moving averages for a moment. And one last note before I do that, um, with the 5 mile pulling above the 10 mile, that's further opening the moving averages now. Even though they've been heavily consolidated for a long time, this is the type of movement that helps alleviate that consolidation. This is the type of movement where we are able to pull the 5 mile up very drastically, and with the 5 mile pulling up drastically, that heavily pulls up the 20 mile. And the 20 mile is truly the kind of key to everything here. Um, with the 20 mile starting to pull back up again, we can see that this massive, massive compression with the 20 mile and the 50 mile here is now starting to alleviate and starting to open back up again. So we're starting to really exit that bearish territory. With this structure, and I'm going to go ahead and turn off the Bollingers and the moving averages. But with this structure, and I apologize for some of the smaller drawings here. Well, actually, let's go into it. So for our chart, we broke above that potential selling channel that I marked out. So I'm going to go ahead and delete that. Now, with that said, as you can see, the structure we've been building has been very, very bullish overall. We heavily anticipated that upside. We had many clues that this upside was coming. We broke out of this liquidity zone. We rejected this major red liquidity zone. And after breaking out of both of those ranges, I'm going to go over to the VVIX for a moment. After we broke out of both of those ranges, we have been pulling back down into the green range, which the green range on the the VVIX means that there is buying on the SPY. So with that being signaled, and even though it's in that green range, we want it to pull really to the 88 or below, and that's something I'll fix in the chart eventually. But once we get to that 88 or below range, that's really when it's starting to signal that the buying is very, very heavily occurring. People aren't hedging the equity upside, which means that nobody is picking up um, the insurance on the future equities. So that's how this moves is when people actually buy the insurance on the futures, and that's when what the big money's trading. So that's why I always track this compared to like the standard VIX. The standard VIX only is tracking the SPAX contracts, which is a little different compared to tracking uh, insurance against equities. So that's why I'm always very, very clued into what's going on with the BVIX. It's an extremely, extremely good indicator. But this is telling us that there really isn't a lot of selling going on. With the selling not occurring, we now have this cup closed. We now have the cup and handle. And from that handle, that's how you get the breakout. We've been talking about this for little less than a month, about 3 weeks now. But this structure has been extremely, extremely bullish, and we really identified this at the head when we hit that low, because that was back at a lower Bollinger move, and lower Bollinger moves are one of the most bullish times to buy because that's when you get the major upside. And that's kind of the same story here and that's why I was so um just expecting this massive upside is that we had two lower Bollinger moves with all of the bullish signals, with the VVIX pulling down, with the moving averages starting to pull into bullish territory. I know there's a lot on the screen right now, I apologize. But as you can see, um, the 5 mA is going to be above the 10 mA, the 10 mA above the 20 mA, 20 mA above the 50 mA. We have the 20 mA expanding away from the 50 mA. We have the 10 mA expanding away from the 20 mA. And now we're going to see the 5 mA expanding away from that 10 mA. And that's how we get a lot of massive upside. So very, very bullish unless we see, again, hot data, which is quote unquote good data. Um, Unfortunately, good data tends to cause equities to do poorly right now. And that's primarily because of the rate cut odds and everything else. Now, what I finally want to go over is that the ADL has been very, very strong over the last few sessions. So if you're looking to short this, I would not be touching this yet. Um, the time to short is at the upper Bollinger, and this is one of those moments. I'm not going to go back throughout all the charts, but feel free to do so. You'll find that I'm very, very correct about this because this is back tested. Um, the upper Bollinger day 2 generally gives you the higher high of the cycle. Okay, meaning the whole 20 mile cycle, pulling above that 20 mile and pulling below. So once you get to the upper Bollinger day 2, generally that's when you short because that's how you get your downside. I'll show just another example, and this is during the rally when it was very, very difficult to short. This was another example where we had the day 2 upper Bollinger receive the higher high, and that's how we had a very nice short. Even though this only lasted, I believe, an hour and a half, an hour, something like that. It was a very, very small window of time. With that said, we have a ton of bullish structure in here. I would not be shorting that until we really hit the upper Bollinger day 2. Because with all this bullish structure formed right here, and I'm going to go ahead and turn off the moving averages and Bollinger Bands so that everyone could see. But with all that structure in here formed, all that madness we got drawn on the screen, what this does is this now completed a very, very large cup. Okay, this doesn't look like the prettiest cup in the world, but we don't really judge around here. What we're expecting from here is upside. And from this upside, that's how we're going to get any form of downside to build this handle on this very, very, very large cup. Um, yeah, I am very bullish right now on tech overall and on the SPY overall. I'm just concerned about the macro issues with especially Japan right now. Let's just very, very, very quickly go over the USD JPY. But this is extremely elevated still since the Japanese rate hike. They're trying to strengthen the yen, and this is telling us that the yen is still falling. They're still seeing weakening in their yen prices. Now, the Bank of Japan has been seeing their treasury yields rising, but again, that's not a good thing. That doesn't mean that they're attracting the customers that they want. Generally, you want to see the bond yields starting to drop. That's when you know that the customers are really picking up the pace. So Japan still has a lot of work to do. Um, if you were trading during the prior carry trade and It was a very, very large move. It happened over a few weeks, actually a few months. I want to say it was like a month and a half. Um, but we're at that danger zone. If we start to leg up any further from this range, we're really at that point where the Bank of Japan might really have to consider doing a major intervention, which that means they're going to be selling treasuries, they're going to be selling crypto, they're going to be selling equities, they're going to be selling MBSs, all sorts of stuff. So we have to be very, very cautious about that, even though currently everything's telling us that all all flags are green to go and we're going to blast off. Um yeah, I'm going to end tonight's video there. Thank you for watching as always. I always appreciate each and every one of you. The market looks extremely bullish for tomorrow. Um I'm definitely going to be buying this upside and capturing some of this upside. There's still a whole about $10 of upside. If we get a 5 mod test tomorrow, then that gives us about $12 to $14 of upside. So I'm looking to definitely take advantage of that. Um, just again, be a little bit concerned that potentially the top of a cup, we can get that downside. Sometimes that downside will happen literally right at the top of the cup. Usually, in my experience, that's not what happens. Usually we have to push upward, build bear structure, and then see the downside. However, just very quickly, I do want to highlight this, is that potentially we could have a head and shoulders getting ready to form here. So if we do have selling tomorrow, and if we do have actual just rejection below the 5 mile level, then that's going to push us down to creating a right shoulder on this potential head and shoulders. And then that would be the bearish structure at the top of this cup. That would be what pulls us down and then allows us to head back upward. So again, I will be buying the 5 mile test if we have it. If we don't have it, then I'm just going to be buying straight into the SPY, um, because that means we're basically going to be getting, that 700, 701, 702 range. So with that said, I hope everyone has a great evening, a great day. Trade safe. I hope you've been making some really good money over the last few days with the callouts. Um, they've been they've been really good. I've been able to scalp very, very successfully with them. Um, Today would have been an absolutely killer day. I'm actually very disappointed that I didn't get a trade today. I had appointments the entire trading session, so I just had no ability to scalp. So I'm kind of disappointed about it that today was the move that I really expected yesterday. Anyway, with that said, this is probably the third time now. Have a great night. Have a great day. Thank you for watching. As always, I appreciate each and every one of you. Um, let's have a really great day tomorrow. And again, tomorrow's video is going to be very, very important because of all the unemployment data. So, yeah, take care, everybody.